Actually, for most of the Asian markets, it's a very flat kind of opening to trade. The airline will have nearly 70 planes grounded by March 2024.
19,700, which is nothing but the 50% and then the 61.8% retracement of the fall from the all-time high.
Any pullback in oil is good news in the current circumstances.
The margins, just look at that, 18.5% margins compared to 12% same time last year.
Actually kind of cautious on Indian equities at the moment. From an emerging markets context.
Margins improved all the way to around 21.7%, which was a 5-quarter high for Alchem.
It's not bad. The Nifty is at that 19,450 mark.
And your suspicious nature is pulling you to figure out what is wrong.
Suddenly, I would say that we have multiplied the possibilities of the economy.
Coming to our market, very range-bound, choppy, but in a small, narrow band.
Nomura has raised the EBITDA estimates by 3% for FY25.
The company started the IPO process for its health insurance subsidiary, that is Care Health Insurance.
Government agencies including ED, IT and GST departments are currently closely analyzing money movement via online gaming companies.
Nifty, it's up 48 points, closer to the day's high.
Well, that was the day gone by. You're with us on Closing Bell. And, well, what we've got is a bit of green on the screen, a fair amount of volatility today. But once again, it's mid-caps that are literally stealing the thunder. I'm Surabhi Upadhyay. With me in the studios is Nigel D'Souza. In a bit, we'll have Prashant joining in as well. What a day.
Well, that's right, Surabhi. We're trading in the green, but it seems, in the near term, maybe we'll see some bit of consolidation. And we've been saying this before, that you prefer the GIFT Nifty actually suggesting you start lower. Yeah. Because that's giving a chance to enter. When it suggests that they're going to open up 40, 50 points, it's giving the bulls minimum number of chance to enter, right? And even today, if you bought at the opening, you'll not be making any money. But the real theme, I think, is in the broader markets.
Absolutely.
Just look at the breadth of the market. Very, very good. The mid-cap index is still up close to around 0.8%. Let's get some of that up for you on the screen. And still, you have more number of stocks advancing than declining. Now, for the final hour of trade, what can make this a really good or bad session will be the Nifty Bank. Yesterday, we had the Nifty Financial Services Index that came to the party. And that ended at the high point of the day. And that has an overlap with the Nifty Bank. Now, in today's session, you have the Nifty Bank that will play out the weekly expiry. And that's actually underperforming. It's down close to around 140 points, or it's closer to the lower end of the range. So let's see whether or not it can bounce back from here. But that will be the swing factor, particularly in the last, in the last hour or so. So, Surabhi, the Nifty Bank is the one that I'm tracking for today. And in terms of individual stocks, well, that are moving around, a few of those names, Apollo Tyres, the numbers look good. Stock opened up 4%. It's now 8% higher. So that one's building on to its gains in today's trading session. The other one that we're looking at is, some of these other names like BHEL that have seen a good rally, but that's seeing some bit of selling pressure. Birlasoft as well, valuation-wise, not very, very cheap. The street, though, has bid up that stock. That has moved to the low point of the day. So individual stocks are doing a thing of their own.
Oh, absolutely. We're not getting very clear cues from global markets as well at this point in time. Europe is trading absolutely muddled around the flat line. Futures aren't very decisive, though in the last, I think, half an hour, there's been a bit of a leg up in some of these global indices. So we'll watch for what happens. But to add to Nigel's tally, you can see hardly any change on some of these European markets for the time being. But to add to Nigel's tally, today you're getting very strong reactions on a couple of numbers. Look at a stock like Prince Pipes, for instance. Yeah. There's a 17% up move on that one. So the market is trying to look out for any outlier earning that's come through, and it's happy to reward. That's played out. HPCL is a strong story, and we'll talk about that as we go forward. Of course, you can argue that there's this whole added buzz of maybe some value unlocking that could be helping. But 7 to 8%, and it's been a constant sort of run for HPCL. So plenty of names to really discuss. By the way, follow-on buying on Jyoti, bit of more buying on Trent as well. These were yesterday's really strong stars. So the market has plenty of momentum in the right kind of mid-caps, and that's probably a healthy market that we are in. So let's get started with some strategies that you can consider for the last hour of trade. Mitesh is with us as always. Good afternoon, Mitesh. What do you make of things right now? And particularly on the Bank Nifty, what's the sense? Because again, it's now heading close to the morning lows. Need to see if they hold or not.
So my sense is that I think, the Nifty is still isn't showing these signs of getting past 19,450, and the Bank Nifty, in fact, started falling much earlier than the Nifty for the day. And we need to see the Bank Nifty get past 43,800, 850. I think both the events look like, might take a day or two more, which means that there could be a chance of entering at a better price point and the Nifty could give you a dip to about 19,320, 350 zone, which is where I want to buy on the Nifty futures. I mean, I'm referring these to a spot levels, but then the trade will happen in the futures segment. So I think, wait it out. I think what we've done is that we've taken some profits and reduced our long exposure. Now I would want to buy only once the Nifty starts getting past 19,460, 470, and then, take a fresh trade from there. But till then, I think, wait for a dip to enter. On the stock side, though, we're still trading with long bias. So I have a buy on Siemens with a stop at 33.80 and look for a target of around 34.65, 34.75, that kind of a range for the stock price. And the other stock which I have a trading call is sell on Z with a stop at 263.5 or 264 and target of around 250.
Okay, all right. Thanks a lot for that, Mitesh, for joining, give us a call on the index as well as individual stocks. But just want to pull up a few stocks that should come up for you on the screen. Infosys, just pull up the intraday chart out there. That's a larger weight on the index and that's taken the leg down. So I think Infosys should come up for you. We're seeing some bit of profit taking out there. Pull up IndusInd Bank. That's another one that I'm looking at. Intraday chart should come up for you. That stock as well has taken a bit of a leg down. So let's get the intraday chart out there. And I think we should pull up HDFC Life, if I'm not mistaken. So select frontline names actually are coming for selling pressure. And that's the reason that the Nifty as well, from being 30 points up, is now taken a bit of a leg down. It's up only around 10 points out. So it's not the banking names actually, but it's a couple of these other stocks that have seen some bit of selling. But should be briefly mentioned HPCL. And the stock is surging. Remember, the stock saw a good run yesterday as well, following its second quarter earnings. Sonal Bhutra joins us to tell us what all is aiding the stock's up move today. Sonal?
Thank you so much for that. Well, 9-day running for HPCL, where it has seen gains, highest level since July as well. Couple of reasons here. The first thing, of course, is the entire oil marketing universe has done well in Q2. For HPCL as well, it was a beat in terms of numbers. If I look at it, margins came in higher at 8.6%. Profits were higher at 5,100 crore rupees. The GRMs at $13.3 per barrel were higher by around $5 to $6 per barrel, both on a YOY and on a quarter-on-quarter basis. Now, the second trigger for the company now is all the expansion plans. It has been on a capex spree in last 5 years, and now it seems to be reaping those benefits. It will be raising its refinery capacity, which will come on stream soon. One is at the Vizag refinery, where it's 7 million tons per annum, and they're also commissioning the Barmaid refinery, which is also a huge capacity as well. Mumbai refinery has also expanded from 7.5 to 9.5 million tons per annum. They've also commissioned 2 major pipeline projects in the south. They've also commissioned a regasification and storage terminal at Shara, and overall they plan to do a capex of 75,000 crore rupees over the next 5 years. And this, how will it be split? 20 to 25%, 25 to 30% of this will be in renewables, 20 to 25% in refining space, and balance on marketing. So they are looking at diversifying their current product portfolio as well. The third reason is they have actually put out, or they have commissioned, a wholly owned subsidiary for their green businesses, where they will be foraying into renewables, EVs, there's hydrogen segments, and crude to chemicals as well. And the last one is that they have spoken about lubricants demerger. It happened back in Q4 FY23. There's some update on that, where the company says they are awaiting certain approvals coming in from the government of India. They are looking on either listing it separately or actually looking at a strategic partner as well. So some value unlocking is what they are planning in the lubricants business. On the back of all this, the brokerages, they are quite positive. Nomura has raised the EBITDA estimates by 3% for FY25, 8% for FY26 on higher refining margins of the company. ICICI Securities has increased the FY24 estimates by 122% and FY25 by 17% versus previous estimates. The thing to watch out for the entire universe would be the elections, because that could pose some threat to their marketing margins. But for now, looking good for HPCL.
Well, looking very, very good actually, Sonal, for HPCL. The stock has seen a big rally in the last couple of sessions. Prakash Diwan joins us to help us out with some analysis. Well, Prakash, the stock is up close to around 8%. I think we pull up the last 5-day chart. You'll see the stock is up, I think, close to around 15%. What's your view on the stock from here on? The best is in the price, or the best is yet to come?
So, good afternoon, Nigel. So I think the move that we've seen this last recent 15% that you saw, I think it's just a realization that there's a company which is valuable at 40,000 or 42,000 crore market cap with an EBITDA potential for the whole year, which is 30,000 crores. I mean, when are you going to get something which is as reasonably priced? And I mentioned the same thing of the other PSU company, which is in the oil segment, and that's available at less than 3 times P. I'm talking about IOC, for instance. So I think there is a very clear mismatch in pricing and value that some of these companies reside on. And to answer your question whether there's lots to go, I think for all of these companies, particularly HPCL also, there's much more to happen as they expand capacity. And at some point in time, the market will start realizing that the replacement cost itself is so significant. While, this kind of energy transition is not something which everybody is very gung-ho about, but given the fact that they are approaching growth in a very balanced way, with green energy as well thrown in, I don't see any reason why the re-rating cannot continue. If you wait for a year or so, another 40%, 35, 40% upside is absolutely par for the course from United.
Okay, that's HPCL. What a move this one stock has seen. Looking at some more names, we have Alkem that's seen plenty of buying. Some of these mid-cap pharma names actually work very well. Prakash, hi, afternoon. Pharma has become quite the flavor of the market, right? In the last, I think, 1 week or so, and some of the earnings have been pretty decent. What have you made of it? Putting any fresh money to work here?
Of course, absolutely. I think not just this quarterly earnings, but let me give you an anecdotal input that I recently learned, and I shared it with one of the presentations I was making on the weekend. In the first 6 months of the year, up to June 30th, the global US FDA has given out ANDA approvals globally, out of which 60% actually have come to India. The rest are across US, Europe, some of Asia. What it tells you is that Indian pharma companies will be able to monetize this opportunity, this huge pipeline that's come their way, which is 50% more than what they had starting January of this year. And all of that will start coming into picture next year. So there's absolutely no reason why this growth will not continue or pick pace, because most of these companies have actually been very range bound. If you look at the P multiples, they are pretty soft. If you look at the kind of amortization of their R&D cost, that's also done. So take your pick. And by the way, pharma is the largest sector in terms of listed companies in our markets. So you have enough of a choice. Don't get caught with names which are kind of a bit flashy at times, and then they kind of have a very long phase of underperformance. But look at businesses which have an ANDA pipeline. Look at businesses that are not richly valued yet. And I think the next year will probably be the story where, and I remember your conversation with Sunil Singhania the other day, where one of the sectors that you guys discussed and he mentioned was pharma. So I think there's much more building up there than just quarterly earnings improvement. And that would be very secular from a long-term perspective.
Yeah, that's a big portfolio call at Abacus. They are looking at pharma companies very closely and seeing that as a multi-year bet. So indeed, that was a conversation on the Market Cafe. Hang on, Prakash. We'll have some more questions for you. Let's focus on more stocks that are buzzing around. And Apollo Tyres is definitely one of them. It's been up and about right from the morning, around 5% higher right now. We have Sonia joining in. So the earnings were definitely on track, Sonia?
Well, absolutely. The earnings were on track. And, there are a couple of things which are playing out for Apollo Tyres. See, the top line growth is still in single digit, but the operational performance has been fabulous this time around. Same time last year, they had 12% margins. This time it's increased to 18%. That's also because of lower crude prices, lower rubber prices that are used to make tires. And now, even in today's trade, crude prices are below that, $80 a barrel mark. Hence, all of that will aid Apollo Tyres in the quarters to come. If you remember, JK Tyres numbers were also very strong last week, and hence, post that, the expectation was that Apollo Tyres would do well. If you break it up into geographies, the Asia Pacific and Middle Eastern market is doing very well for Apollo Tyres. There's good growth that we're seeing in the EBIT performance. Although the European market is a bit on the slower side, the EBIT has actually fallen year on year, while the revenue growth is in low single digit. But all in all, good set of numbers, and looks like this trend of improving margins is something that can continue given the cooling off of crude prices. Back to you.
Got that. Thanks a lot for that, Sonia. And the stock is just building on to those gains. Prakash, what do you make of these tire companies? They're doing quite well. And Apollo Tyres, you had a sense that it's going to be a good set of numbers, but it's just built onto the gains. And with 50 minutes to go of the trading action, the stock is at the high point of the day. Your take?
So I do agree. What Sonia said was, the entire sector is kind of getting a very recent re-rating. And you look at CAD, in spite of its own share of trouble, you look at Apollo now with these numbers, MRF, of course. What's happening is that autos have made a comeback after those 1.5, 2 years of a lull. And the numbers from Maruti and Tata Motors and M&M actually tell you that the overall market size is growing. It's not about shift in market shares. The reason is that semiconductor chip shortage getting out of the way. acceptance of newer this thing. And the replacement market and the OEM market both have been actually growing very quickly in the last 6 months. And this could continue for at least another 12, 18 months. My pick on that, Apollo, of course, is priced quite fully. It's always been at a premium. If you look at JK Tyres, the kind of multiple that it has traditionally got, Nigel, which is about, 15 times, 12 times, it's been because of certain reasons where people had issues with what the promoters could do with in terms of corporate governance and all that. But that is seemingly changing because the numbers are compelling you to look at them anew. And my sense is JK Tyre will still continue to at 8,700 crores market cap. I think it does offer great value from what they have in terms of capacity and where they can go in terms of revenue and operating leverage. So yeah, while Apollo and Fiat and all offer great this thing, the pricing is much more favorable for some of these smaller names.
Got it. All right, Prakash, request you to stay with us. By the way, just want to pull up a few stocks in the broader markets that are moving around. HAL, I think that's one stock that had moved to the high point of the day. Pull up HAL, I think one of those defense players, it moved a little bit higher, I think, in the last few minutes. Pull up RBL Bank as well has moved to the high point of the day. HAL, in fact, has taken off in the last few minutes. So that's a stock that should definitely be on your radar. On the flip side, a few stocks have slipped. We had Genus Power that came out with a big order win today. Now I think the street is waiting by for execution because that stock, in fact, has slipped close to 6% from the high point of the day. So Genus Power, that's one stock that has slipped a little bit lower. Happiest Minds is another name that's moved a little bit lower in the last few minutes. I think that one should come up for you. And Gujarat Gas as well. It appears it's only 0.5% down, but from the highs of today, it's come off considerably. So a few of these names, they are seeing profit taking from the broader markets as we speak. Well, let's slip into a short break. As we do that, let's get you some excerpts of our conversation with analysts. At the BofA Securities Conference, I spoke to Kunal Tayal, the Senior Analyst IT and Real Estate at BofA Securities, about his thoughts on the Indian IT as well as the real estate sector. Let's listen in to what he had to say.
I think it's a very interesting time for the technology sector. If you rewind just about a year back, most of these companies were at a very high growth rates. But what we've seen over the past 4 quarters is that the growth rate for some of the large cap companies have come off from a level of about 15% YOY to just 1% YOY. To our mind, the bottom for IT stocks happens when this rollback of these initiatives is done with, and that's where you could get, let's say, the bottom in stocks. Our own thought process is that we might have to see soft growth outlook for the next 2 to 3 quarters, and then maybe there could be signs of an uptrend after that. I think in terms of the upcycle, I would definitely agree with the assessment that we are in year 3. The confidence that affordability is going to be in the court of the consumer is quite high, and therefore we should continue to have an upcycle on the cards. That's point number 1. The second aspect we look at is investor demand, because again, if an end consumer is buying the house, it's that much better for the longevity of the cycle as opposed to investment buying. The feedback again we get is that this is mostly end consumer demand and not investment demand. And therefore, on the basis of this, we are still very constructive on the real estate cycle.
Welcome back. Another stock that has reacted well to its numbers is Cummins. It's been moving higher in trade right throughout the day after the Q2 print. Upasana is here with the details as well as what the company said in its conference call. Upasana, tell us.
Well, Cummins India has reported its Q2 FY24 numbers and it's clearly a margin beat. There has been a margin expansion of almost 219 basis points at 17.8% versus the poll of 15.3%. While the revenue saw a downtick of almost 3%, somewhere around 1,899 crores, which was mainly due to weak export sales. Now, earlier this morning, company held conference call and here are some of the highlights. While the company sees double-digit revenue growth in FY24, it says that the margin expanded on commodity cost control and pricing will continue at the current levels. It also aspires to grow its margin by 100 basis points on Y-on-Y basis, and demand continues to remain robust in domestic market, which was one of the key concerns. It has also stated that more than 70% of the sales were from CPCB4 Plus products, and it expects the demand to normalize and sustain for the rest of the year. The demand for power generation sets is likely to remain robust, is what the company has indicated, and it is aiming CPCB4 Plus products to first enter EU, followed by US markets. In terms of inventory, the company has said that the inventory levels are back to normal levels and Q3 and Q4 are likely to be better.
Okay, all right. Thank you, Upasana, for those details. So that is Cummins. Prakash, comment on this. I remember two numbers today. One is Cummins and the other was Skipper. And we had a actually call with the Skipper management sounding so optimistic and so bullish on their order book outlook, the revenue outlook. Your take on industrials, and after numbers, which are the stocks that you like the best?
So, to me, that's a tough one because industrials, most of them have surprised the street and they're setting a very different tone in terms of continuity of growth in revenue and operating leverage. So I'll tell you, there are small companies that I have known which are 1,000, 1,500 crore market cap, but the kind of expectations they have to grow is at least a multiple of 3 or 4 times over the next couple of years. Now, that is something which we've never seen before. So you will be spoiled for choice in terms of what all is growing and could grow. And I think the best way to do is wait for earnings season to come to a draw and then choose out of that. But on Cummins, I can tell you, if you've seen the price just less than a year back at about 1,100, you might find 1,760 very difficult to buy into. But I think that's exactly what ABB did when they started using in the India-based, the company like Schaeffler, which do that in bearings. So India has become the base for supply to so many of these global markets that these MNCs have. Now, if they get entry into the US market or the, even the EU or the MENA market, it's going to be significantly far, bigger in terms of scale than what it is today. And they have the facility, they have the, capacity to kind of cater to all that growth. So I don't think, that's the reason why the margin growth is so superior, because you really don't have to invest too much into kind of growing into a very different scale of revenue. And that's what Cummins has demonstrated in the last 1 year. I think they'll continue that for at least the next 3-4 years, more on a global scale. So wonderful business, great opportunity. But as I said, since the price has run up, it becomes very difficult to buy into it at 1,700 plus. So you could wait for dips to give you comfort, but definitely something worth looking at even from here on.
Okay, buy on the dips maybe, something to look at in the time to come. Prakash, before we let you go, EaseMyTrip, that stock in fact is reacting, I think, to its numbers, and as we speak, it's come off considerably from the high point of the day. I think if we get an intraday chart up for our viewers on the screen, it'll get us a better picture. But Prakash, I wanted to know, what's your view on this name? I met EaseMyTrip earlier this week, and they were sounding very buoyant, in terms of the outlook, in terms of demand on ground, and I think they are the larger player as well. But how would you approach EaseMyTrip, that is? The numbers came out, the stock was up, I recall, 3-4%. Now it's down 2-3%.
Nigel, so I understand your Delhi trip must have got you to meet up with the EaseMyTrip people, and there is absolutely no dissonance in terms of what their growth plans are, because if you look at, they've not only gained market share, but they've also made their service absolutely flawless in terms of whether you book a hotel or a flight or even a train ticket now. Now, that tells you that the sector is growing so rapidly. But whether an EaseMyTrip with its own unique revenue model where they don't charge anything most of the times, Is it going to make it to the same, growth, levels? I doubt. So it's like the path to profitability for EaseMyTrip is a little bit of a doubt. And that's exactly why you keep on seeing these vacillation in terms of profitable numbers coming on a quarter-on-quarter basis. My sense is if you want to play that sector within the listed space, you have a rate gain, which has not only demonstrated organic growth, but it continues to have that kind of promise from the commentary that we heard. I've not done a very deep dive into that yet, but on optical first look, it does sound much more promising than a EaseMyTrip. So, and you have a wider base to play on in terms of wider subsectors to play, not just flight bookings and all. So look at some of those things. I think you'll be better placed. EaseMyTrip, I'm not very convinced. And these numbers definitely don't have any element of conviction coming back.
Okay, all right, Prakash, we will leave it on that note for today. Thank you very much for joining in. Not sure if we're chatting with you again before Diwali. I think we are, right? Just in case we're not, season's
Friday.
greetings. And Friday.
We have another. Friday is the day when we get Prakash back.
Absolutely. Friday is the day with Prakash. How can we forget? Okay, so see you Friday. You have a good one until then. Let's welcome our next guest on the show then. Jigar Mistry, co-founder of Buoyant Capital, is with us. Jigar, good afternoon. Great to have you on the show, and festive greetings to you as well. So you tell us, it's been an interesting ride in the market, a furious rally from April all the way to July, and then this consolidation. As we enter the news somewhat, what's the thought you have? Do you have a cautious bent of mind, or do you think we're good for more?
Absolutely, Surbhi. So, I'll start with season greetings to you and your team as well. Would it surprise you that if you leave out the May 2004 to December 2007 cycle, we are currently in the strongest small cap rally we have ever seen. And I'm including the December 11 to December 17 cycle here. Now, on all of subsequent, sort of not to, be a party pooper, but in all subsequent times when the small cap has corrected between, October 10 and December 11, it corrected close to 45%. Between December 17 and March 20, it corrected 50%. So I think while the going is good, let's all have a decent party, but sort of keep an eye out on all the risks that are out there. I was telling Nigel earlier that, of all the companies that have rallied more than 70% over the past 6 months, 85% of them have been small caps. So I think while, this time it truly could be different and there is always that possibility. But evaluating from an underlying standpoint, I think there is difficult to find a huge amount of value which will enable a lot of re-rating going forward. So India as a sort of phenomenon, as a country, as an investable asset class, and equities within that continues to remain very attractive, but need to keep an eye out on where sort of we are going rather than getting too much carried away into the undercurrents.
Okay, all right. Hi, Jigar. Good to have you on the show. As we speak, we have numbers that are coming in as well. Raymond's numbers are flashing for the viewers. Remember, this is one stock that's seen a big re-rating from the recent lows, holding at around 1,850. But the stock has moved to the low point of the day because on the top line, there's a very mild growth. And on the EBITDA front, actually, there's a bit of a degrowth. And that's what says that there is a margin compression. I think it's shaved off close to 150 to 200 basis points. So that's why the stock is giving up a little bit from the day's high. Jigar, got your view in terms of how valuations, how the mid-cap and small-cap space as well is shaping up. But what is your advice to your clients? What are you advising right now? Which are the sectors, which are the themes? If you can name a couple of stocks as well, you'll have upped your weightage.
The business is, Nigel, that we continue to get very attracted to remains banking financials in the sort of, see, whenever you are having this thing where, FIs sell, they can only sell what they own. To that end, you have banking and financials forming top 6 of the 10 exposures that they have in India. So in a situation where interest rates are likely to remain higher for longer, you will have the value of the underlying assets rising at a time where the largest shareholder will be forced to sell. So in the scenario where, you will, in the run-up to the next 3 or 4 months, I think adding banking and financial will be a great sort of thing to go by. Pharma doesn't look very bad either. So that's a place where we have been adding weights, financials, Pharma. IT we have evaluated, but don't really see a lot of value. It's not expensive, it's not cheap, but there is no growth. So very difficult to take a call there.
Okay. Stay on, Jigar. We've got Prashant with us in the studios as well. Prashant, welcome on in. A very quiet day. It looks like people have gone on Diwali holiday already, right? Just going by the large cap screen alone.
You know, I raced all the way from PKC. Now you tell me a quiet day.
Not in the mid cap.
I said, must make it. 30 minutes to go.
I'm caveating my statement by saying that is applicable only to 50 stocks on the Nifty.
Well, the broader market is doing is buzzing. No, absolutely. So point taken. Jigar, good afternoon. You know, you guys have been doing well, and the fund is growing, and it's good to see you here in Bombay. Otherwise, Jigar is, I think I can say with some degree of confidence that he's never in Bombay, right? He's always in some part of the country, meeting different bunches of investors, potential investors, etc., etc. How's the mood though, Jigar? I mean, you have a real sense because you meet so many people. Is it one of people still sort of want to allocate a lot to equity, or you know, where are we there in that sense in terms of allocations?
Yes, Prashant, nice to see you on air as well, besides in person. But yes, see, equity allocation continues to remain a very great story with India. So it's not a scenario where people are taking a call as to whether it makes sense or not. And even, you know, if you look at the recent sort of elections, I was mentioning to somebody that in 2018, you know, BJP sort of, if you look at the seat share within the Legislative Assembly versus the general elections, BJP virtually swept all the sort of general election seats, 90% plus hit rates, even when they lost in the state assemblies just a few months back. So I think investors are very, very well cognizant of scenarios like this. They are more or less keen that the continuity in policy remains. And if risk needs to be calibrated, rather than taking cash calls, they are a lot happier doing it via adjusting the betas of their portfolio. So I think they are rerouting a lot of their investments away from small and mid-cap specific funds to a lot more either multi-cap funds, or if you're running equity yourself, then towards a lot more, large cap oriented schemes rather than, or large cap oriented stocks rather than small and mid cap stocks. I think that is consistent with what we are doing in our funds as well. We were almost 60% small and mid cap. So 50% small cap, 10% mid cap by March 23. We put out a recent webinar, and there we have actually sort of gone the other way. So small and mid cap are now sort of less than 39% of the fund as we speak.
The phone is ringing. I think the calls are coming in there.
That's a potential investor. Take my money.
Yeah.
Check is on its way. I'm just kidding. Jigar, you talk to us about an idea. I mean, one or two ideas which you think are looking good even from here, in an absolute sense, where there is a lot of upside. What are the stocks?
Yeah, so the one that we did put out on was something that sort of with the results, our top 3 additions over the last 3 months has been one of these companies called RR Cable. It's a space which is fairly crowded, but where margin sort of recovery happens. That's a company that does sort of reasonably well. You've seen sort of stock being available at a very attractive valuation. The margins were at trough. We think that will essentially get re-rated, and we are looking at industry-leading quality and industry-leading growth there. So I think both those sort of tick marks happen as far as RR Cable is concerned. There is another company which we sort of added, was a company called Avas Financials. We didn't own it for a very long period of time, but I think with the shakeup in the management that has happened and the sort of stock giving in a lot of value after that, I think affordable housing, pristine asset quality, undemanding valuations, I think all of them define Avas Financials. The results may take sort of a couple of more quarters for the new management to set in and settle down there. But I think those are the 2 large additions, or rather top 3 additions that we even put out in the public.
You said 3. We got 2. RR Cable and Avas, which is the third one.
Third one was ICICI Lombard, but then who really wants to own large caps these days? So Like people just want to sort of know and understand what's really happening in the small and mid cap space, right? So large cap companies, I was just sort of, before you joined in, Krishna, I'm telling Nigel and Sukhvi that this is the second sort of strongest rally in small cap that we have ever seen in the Indian equity markets. And if you take 25% at the index level as a correction, then sort of in the two corrections that has happened post 2011, index fell 45%. Between Jan 18 and March 20, small cap index fell 50%. So an eye out is something that at least we are really wanting to keep out as far as the small cap exposures are concerned.
All right, Jigar, any view on all this renewable theme or the power theme? Any way you all have played it? In terms of renewable energy, you have Suzlon that's, gone from strength to strength. We had a bit of a dip intraday, but that's taken off again. And in terms of power reforms, there were PFC, there was Genus Power, various other ways, smart meters, power financing companies, or core power companies as well, like a JSW Energy. Have you all played either of these two themes?
Yes, Nigel. So see, in and outs, yes, maybe. But I think, sort of being a utilities analyst comes with its sets of baggages, right? So I have for all my life been one of the utilities analysts besides metals, etc. But you've seen the APDRP fail in 2012. Then I was very happy when Uday was first announced in 2015. Then I was again happy in 2019. By 2022-23, it sounds like the same broken record, right? The problem in India is that if you look at the entire value chain of the utilities, then the losses are at the distribution stage, and those are controlled at the state sort of level. Now, because it's in the concurrent list, right? So the central government can put up the wires. The responsibility that power flows through them is there with the state governments, and they are burdened with losses. And most state governments see utilities as sort of normalizing the Gini coefficient rather than a commodity that should be priced evenly. So unless this story is settled, I fear power sector in India might not really find a sustainable valuation upside that we've been hoping for a very long period of time. In absence of that, you will have, one of these sort of short-term plays where you'll say, because the sort of state discoms cannot get into LTP, long-term power purchase agreements, therefore something like who is selling power on the shorter-term exchanges might make sense, or the power exchanges at times because of rising volumes and rising heat makes sense. But if you are truly wanting to deploy large capital or large percentage of capital into a power sector, that sadly still remains elusive. So RPO can cover part of this renewables point that you mentioned. Some state-led capex can in turn, just in the shorter time, lead to upsides. But it's not getting re-rated in a hurry. At least sort of that is my assessment of things. But as I said, see, the baggage of the past prevents people from making a lot of money in sectors that are turning around.
Okay, all right. Thanks a lot, Jigar, for stopping by and filling us in with your take on the markets and individual stocks as well. If you don't speak till Diwali, wishing you, your team a very happy Diwali and all the best in making a lot of money for your clients as well. Well, for the time being, we'll slip into a short break. As we do that, though, let's listen in to what the Pharma analyst, Neha of BofA Securities, had to say about the pharma space and the preference she has in there.
On US generic pricing, supply obviously plays a very important role. Now let's look at it, what's happened this year. We did see US FDA action on a couple of plants that led to supply going off the market. We also saw bankruptcies of some of the US companies, which also meant supply coming down. That helped pricing. Also, because you had already seen fairly sharp price erosion in the last year, there were portfolio rationalization by the companies themselves. That also meant lower capacity, and that helped generic pricing. Another data point is the drug shortage. We've been reading about it. Drug shortage in the US is at close to about 300 active shortages. All of that point to a better pricing environment.
Welcome back. Well, the Nifty Bank has cut its losses, actually. It's cut its losses by close to under 100 points, which explains why the Nifty is making another dash towards 19,450. Pull up the Nifty Bank. Yes, just take a look at that. From the lows of the day, it's recovered close to under 100 points in these 60 minutes itself, and that explains why the Nifty as well is moving up. But Nimesh is with us to tell us what he's picking up in terms of dealing room action. Nimesh, one would say it's a quiet day, but fair bit of action, right? Otherwise.
Oh, absolutely. Look, you can't call it a quiet day. There is a lot of flows and the flows are positive. So maybe you'll see the first buy figure from the FIs in today's trade. So that's something to track very closely. And I'm saying this because the feedback was there is buying in frontline names. And also in the last half an hour of trade, there is a basket buying at a leading FI desk in the large cap stock. So maybe that explains a bit of move in the last 10 minutes of today's trade. The other feedback is on the financials. While the Nifty Bank intraday was down almost 0.5%, there are buy flows into PSU bank stocks for the last many days, and that stands in today's trade as well. So there is delivery-based buying happening in the PSU bank stocks from larger FIs. That's overall feedback. I guess the broader market outperformance continues, so that's showing up in the index as well. And today, for a change, the entire pharma basket is doing good on the back of very strong quarterly numbers from some companies. So pharma stands out, but I guess today's important data to track would be the institutional data, because my sense is you could see a buy figure today from the FIs.
Okay, well, that's a sort of broader look, but in terms of specific stocks, Nimesh, what are you picking up?
Well, in terms of individual names, Prashant, the first stock on my list is Welspun Corp. That's been buzzing for the last many days. Even in today's trade, the volumes are on the higher side. There is delivery-based buying now happening at an FI desk. So, and the feedback is maybe a large sovereign fund is a buyer in that stock, and hence a big move in the last many days. So that's the first one. The second stock is Tata Motors. Only for today, the stock is marginally under pressure. That's largely because there is delivery-based selling in Tata Motors and NFI day, so that's the reason that stock is a little bit under pressure today. The third stock is Ircon. For the last many days, you've seen this rotation of PSU stocks doing good. For the last couple of days, the feedback is maybe a couple of HNI investors are quite active, and even in today's trade, the volumes are quite high at some HNI desks, so Ircon stands out because of that. And the last one is EMS. Again, the recent listing, not too much of a past history, but buzzing on the last many days. The earnings are next week, so that's something to track. But apart from earnings, there is a strong indication that maybe the company is very close to bagging a large order as well. So that is keeping the stock excited.
Interesting sort of list there, and EMS big move. I mean, 7.5%, and from a recent correction, it's come up so sharply, that particular company. Thanks very much, Nimesh, for that. Well, let's just talk about some more earnings which are ahead of us. Apollo Hospitals. Okay, I think we will just get that in on Apollo Hospitals in a bit. But Mitesh is with us with, quick trading ideas. What to buy or sell today for a reverse trade tomorrow. Mitesh, take it away.
Prashant, Ashok Leyland is reversing after a long decline, and I think that could possibly suggest some continuation in the days to come. So I would recommend that as a BTST trade with a stop at 171 for a target of 176. And the other one which I like is Berger Paints. That's also a stock, which along with Asian Paints has given a good reversal. So BTST here with the stop at 580 for targets of 595.
No, got that. So that's individual trades. Just your view on maybe one or two more names. These oil marketing companies, Mitesh, if you have any thoughts. IOC has had a good week. It's up 10% this week. HPCL has been rallying. BPCL is up about 3.5%. Any thoughts?
Prashant, disclaimer that I have some futures position in BPCL, but I think all the three stocks, primarily led by the fact that as Prakash Diwan was highlighting, the market cap to the earnings possibly, would be in the ratio of 1 or 2, so I think very cheaply valued, and all these stocks are now showing signs of starting some kind of an uptrend. So I think next few days, you would want to buy them on declines and look at slightly positional trade instead of exiting early. So for example, IOC, getting past this 97-98 range was a big plus, and for me, I think, I'm penciling targets of around 115 to 120 over here. Similarly, BPCL, I have a target of roughly around 450 to about 460 on the upside. So that's a good positional trade of about 20%. And HPCL, I think, which has rallied the most today, it has a monthly pivot around these levels of 308, 310. But I think once it clears that, the highest monthly closing of 360 should be tested. So very positive on all these stocks.
Mitesh, Prince Pipe is up. It's got huge volumes. It's up 16%. But I don't know what to make of this move today. Big gap. You know, it's off the highs also. Prince Pipe, technically.
I have not been tracking it regularly. In fact, it was, when the midcap was doing well, it was on my radar. But if you look at the last about 2.5 years of history, the stock has not had a monthly closing above levels of 760, 770. Now that there's some fundamental tailwind, good chance that we should see 760 being captured. Once that happens, I think then the stock is looking at about 900 plus.
Okay. By the way, I'm just looking at volumes on the NSE for Prince Pipes. It's the second highest volumes ever. I think the highest ever was on the day of listing for Prince Pipes, but today is the second highest, just in terms of sheer volumes traded. Mitesh, thanks very much. We'll come back to you for more later. But Apollo Hospitals is the next one we're focusing on. It'll report its second quarter numbers tomorrow. Ekta is here with key expectations. Ekta, take it away.
Well, yes, for Apollo Hospitals this time, the revenue is expected to grow around 12-odd%. EBITDA is expected to grow around 6-odd%. Margins of around 12.6 versus 13.3%. And a profit growth of around 38-odd%. Overall, soft quarter expected on account of factors such as slightly delayed rains. Hence, the healthcare or the hospital revenue is expected to grow 7 to 9-odd%. Watch for higher occupancies on a Q-on-Q basis because the street is probably anticipating maybe an uptick in terms of occupancy. Healthco, which is basically Apollo 24/7 as well as the back-end pharmacy, that is expected to show strong growth. So expect around 15 to 20% growth year-on-year. Expect 10% Q-on-Q growth in Apollo 24/7 when it comes to the gross merchandise value. Apollo Health and Lifestyles, which is the clinics business, is expected to grow around 3 to 4-odd%. In terms of diagnostics, the company has indicated that they have taken a price hike in this segment. So, revenues on that account will be watched for. They have a target of around 500 crores eventually from the business. Margins to be within that 12 to 13% band. The most important will probably be the impact of the losses from Apollo Healthco, which is basically the 24/7 business, and what the outlook would be in terms of fundraising as well as margins going forward in that.
All right. Thanks very much, Ekta, for that. So that is Apollo in focus. There's 10 minutes to go for close. The market's doing just fine. Broader market's doing better. We'll take a break. We are back with Hemang Jani on the other side. So stay tuned. Okay, welcome back. There's about 7 minutes to go for market closing, and we're up about 30 points. But as we've been saying, I mean, it's the broader market and the number of stocks there which are buzzing, which I think is the real story today. Hemang Jani is with us to take us through some of what he's making of things. Hemang, I want to just bring up Trent, which reported numbers. Stock had a big 8% move yesterday. I was looking at some earnings expectations. By the way, earnings expectations have moved up some 10-12% post the second quarter beat. And I was also looking at future expectations of growth for both EBITDA and profit. 30-35% forecasted by some brokerages over the next 3-4 years. CAGR. But you've got to match that against where it is trading now, which is because it's been like a huge outperformer. What's the view? It has very strong earnings forecast built in. I think Zudio is doing well, which is, by the way, I think what has contributed to the beat in the second quarter. So it's firing. But what would you do with the stock?
Clearly, if you are trying to enter into it, it would be a bit tricky because of the way the stock has moved up. But looking at the pure operating performance and the kind of visibility that it commands, and within the discretionary category, you will have very few companies reporting this kind of a growth in the top line with margins. And if you look at the management commentary, again, both in terms of top line, opening of stores, margin, they are sounding very positive.
Okay, I think we lost the audio with Hemang. We'll just fix that and we'll just come back in just a bit from now. Maybe take that opportunity to run you through some more stocks which are buzzing and which are doing very well. Yes Bank will come up on your screen. It's got tremendous volumes. It's up 8%. Okay, I think Hemang is back. Hemang, go on. Sorry, we lost you there.
Yeah, so I was saying that it would be a good idea to look at buying Trent in two parts. Because it's a stock with this kind of performance everybody would want to own. So I think valuation by itself is not going to be an issue as such, but the price move is something that people would be a little uncomfortable with. But clearly the performance delivery and the growth guidance is extremely encouraging.
Okay. We were just talking about some of these oil marketing stocks. You have a view, I believe, Hemang?
Yeah, so, the narrative changes. I think a lot of things are happening. The numbers were good. The crude oil price has corrected. But we have to remember, Prashant, that these are the tactical trading ideas. I don't think we are in a position to take a long-term view here. So yes, there is a rally in some of the names, but at this price point, I would not be comfortable adding on to them.
Okay, I mean, got that. So that is oil marketing companies and what Hemang would do there with respect to investments. Alchem is another one which reported numbers, and again, I was seeing what's happened to earnings in FY 24-25 based on these numbers, and there are upgrades for Alchem as well. You like that one?
Looks decent. I think, in fact, the entire pharma space, if you see, right from Lupin, Sun Pharma, Cipla, companies have come out with a decent set of numbers. Alchem in particular, because of the way the margin guidance has been given and the overall growth and the kind of beat, stock looks decent for somebody who's happy with the 14-15% kind of a return. At these valuations, not too comfortable entering, but a steady set of numbers.
A steady set of numbers from Alchem. Delhi Buildcon, is something happening? Hemang, you want to sort of comment on that one? Pure construction, EPC company.
So very small company, I think about 4,800 crore kind of a market cap. I think the new investor coming in, about 10% kind of a dilution coming there, create a little bit of excitement. And typically, before the elections, mid-cap infra companies, people would really want to own a pie of that. So from that perspective, it's looking great, but not very high quality, or the management quality or the corporate governance not that high. But yes, from a high beta mid-cap infra company space, it's looking quite interesting.
Okay, all right. We'll leave it there for now. Thank you very much for joining in, Hemang. Appreciate you sort of coming on here on CNBC as always. Let me just quickly take a look at what the market is leaving us with. We are ending with 28 points in gain. So it's okay. I think we are. It's not a big day in terms of the range. Also, the high was 19,464, about 30 points away from where we are going to end, and the low was about 19,400. So it's about a 65-odd point range, and we're ending about with 30 points on the day. Take a look at the Nifty Bank as well, which should come up on your screen. The Bank Nifty is down about 0.18%. So the underperformance there coming through perhaps a little bit more. The broader market, mid-cap and small-cap indices, mid-cap index ends about 1% higher. And I think you've got the small-cap index, which of course is runaway. It's runaway, and we're ending off the highs for the small-cap index. The high today was 13,401, and we will end at about 13,340. But this is a new closing all-time high for the small-cap index, nevertheless. So nothing to really complain. Broader market breadth was positive. 1,330 stocks are higher, and you got about 1,020 stocks which were lower. Just counting through some of the big volume-led gains that we had today. Prince Pipes, let's just start there. Stocks at about 722. So big volumes as well. Second highest, as I said. Yes Bank is another one which will come up. 8%, 9% on Yes Bank. HPCL started 6% higher. It ends 7% in the green. Apollo Tyres is another one which is up about 6.5%. Some of these stocks we highlighted, right from the pre-open time. GMDC is another one, 13% move on GMDC, 362. Alchem, we were just discussing with Hemang, 5% higher. Angel One, 2,700, stocks up about 6%. That is Angel One. Poonawalla FinCorp, 7% in the green. RR Kabil is something which Jigar was highlighting as one of the things he's bought recently in his fund over the last 3 months. Stocks at about 1,600, RR Kabil. Prestige Estates, we had the management with us earlier, 5% higher today. Newland Laboratories, 6% in the green. Viatech Vabag has been strong from the morning, 6% there. And so many other names. Genus Paper, not Power, but yeah, 14%, small name there. EMS Limited, very strong mover, 7%, stock ending at about 348, and so on and so forth. Lots of losers as well, but of course, not really big volume-led losers in that sense. Idea Forge started weak and it ends about 7.5% in the red. And there is Mishra Dhatu, Wonderla, some of these names, Kirloskar Brothers, etc., which were down between 4 and 5% or so. But the bulk of the thrust of the move, of course, on the upside, with the broader markets doing, I think, most of the heavy lifting. The index ending about 30 points higher. So that's markets for you. It's a wrap on this edition of Closing Bell from all of us here. Goodbye, but don't go anywhere. Our special offering, Financial Quotient, comes up next in just a bit.